Thank you so much, Simon. Hi, guys. Once again, Happy New Year, and thank you to Simon as always for inviting me back for another month. Just to give you guys a brief background of myself, I've been trading since 2007. I'm a private trend trader, so I look for long-term opportunities in the market as opposed to being in and out of the market on a daily basis, taking multiple trades every single day. I look to take just a few trades a year, and I look to hold those for as long as possible. And as those trends develop, I then look to compound into those trends. It's a far simpler approach. It's less work. It's no stress due to the low risk that's usually allocated. And what's a real advantage to trend trading, and which is something that really resonated with me when I first started trading, is that it's, of course, there's a learning phase which takes a few weeks, a few months, but once you actually get it, it takes no more than 15 to 20 minutes a day in front of the screen, and that's with an hour preparation at the weekend. So my routine typically as a trader is to start at the weekend, do in-depth analysis of the market. That's where I use my software. I have scanners that will go through foreign exchange, stocks, commodities. So I trade all the markets. I build a watch list from the weekend. And so because I have that pre-prepared watch list, knowing exactly what instruments I'm keeping an eye out on, Monday to Friday, I keep an eye out on those instruments, and that takes me no more than 15 to 20 minutes a day, sometimes a lot less, based on what market conditions are. Now, I'm a technical trader across the board. There are some fundamentals that I keep an eye out on when it comes to stocks, but foreign exchange is 100% technicals. A lot of the concepts that I'm going to be explaining and more are all explained in this ebook, which I will be handing out at the end of this webinar. This ebook is totally free. It's written by an amazing lady called Anne Chapman, who taught me how to trade back in 2007. And if I just scroll down, you can see the contents. It starts off with the introduction, and it goes all the way through to the trading plan at the end. Now, one thing that I feel private traders should be much better at is A, doing good technical analysis, being better at technical analysis, and B, understanding that technical analysis is not the same as trading. Technical analysis is simply breaking down a chart, understanding your level, looking at the history, and then being able to determine the levels that price may move towards going forward. That's technical analysis. That's why when you watch Bloomberg and you see people breaking down charts, that's why they're called analysts. When it comes to trading, it's the application of strategies to your analysis that will then extract profit. This is where understanding high probability environments come in, which is something that we're going to cover today. This is where understanding when you're going to enter, based on your understanding of high probability environments, looking at trend structure and going, is it a breakout strategy that I need to use? Is it a pullback strategy that I need to use? You need to then be able to understand how much risk you're going to allocate. Where are you going to place your stop loss? How are you going to compound? How are you going to exit? What levels can price move towards? How am I going to trail my stop loss? These are all things, these are all factors that need to be pre-thought out before you actually execute any trades. And private traders generally tend to get very excited about entry points based on a breakout or a bounce off a moving average or a pullback to a Fibonacci. But the rest of the trend, which is generally the most important part of trading, takes a second seat, a back seat. So trading is more than just about entry points. It's actually the exit management that determines how much profit you leave with. Okay, so these are aspects of trading that I am going to cover obviously in the time that I have. There'll be certain elements of that I'm going to be touching on. A lot of the technical analysis sides of trading are covered in this ebook. It's totally free. I would like you guys to email me on zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com. Please put RTCT, so round the clock trader. Please put RTCT webinar in the title, so I know that you've come from this webinar, and I'll get this ebook out to you straight away. Something as simple as the trading bias compared to establishing the trend. These are often mistaken to be the same thing. They're very, very different. Again, concepts that we will cover today, just to touch on it. Just to show you what it's about, there's 60 pages of in-depth information, charts, breakdowns, examples, etc., etc. Okay, and it's a good 60 pages long, I believe. Yeah, so you've got 60 pages of information there. Okay, all the way through to a trading plan, which of course is essential. I know a lot of traders have trading plans, but remember, it's about the information that you have on the trading plan that's going to be a real difference to the way you trade. Okay, so please email me zaheer@zaheeranwari.com and I'll get that over to you. Right, now let's switch to my trading platform. Hopefully you guys can see this, and the platform that you are looking at is eSignal. So that's the software that I use. I always encourage traders to invest in good software. If you're serious about trading, invest into trading. It's a business. Invest into good education. Invest into software. Invest into software tools. Take your time. Don't be so quick to put all your money into the route that people generally go down is they may have, let's say, a £10,000 starting amount. They'll put that whole £10,000 into a broker account, but then they'll go on the internet and try and find free information to trade the £10,000 with. It's a wrong approach and it's a false economy. £10,000 is a really good starting amount if you have that. With £10,000, you can get good training, you can get software, you can get market data, and you can have funds in your account. And then you want to have a plan. So every month, if you got, and ideally, of course, you have a salary coming in. Every month, you want to be funding your broker account with money from your salary. So instead of putting that into a trading account, you want to be putting it into your broker account on a monthly basis. So if you're earning £3,000 or £4,000 a month, once you've paid off your bills, let's say you have £2,000 of disposable income left, £1,000, put that into your broker account. That's how you've got to be acting. All too often, people have a low amount of money. They don't want to invest into the right parts of trading, and then they want to get rich very quick. And that's where the idea of day trading and scalping comes in, which can work if you have large sums of money. So I'm talking about 6-7 figures plus. If you've got those sums of money, then day trading and scalping can work, because small moves can equate to large sums of money on a low risk. If you've got a small amount of money and you're allocating a small risk and you're in and out of trades, you're not going to grow an account, and that's where frustration comes in. That's where over risking comes in, over leveraging, and eventually how people blow trading accounts. So you've got to rethink your approach, and that's really the underlying message of the webinars that I do with Simon, which is you can achieve wealth and you will achieve wealth, but you have to do the right things. And more often than not, most private traders are not willing to do the right things. They want to do the quick things, and that's how they end up getting burnt. Okay, so one of the aspects of trading that I very much encourage people to look into is investing into good software. The platform that I'm using is eSignal, so eSignal.com, check them out. Now, the advantage to eSignal is that you can have proprietary tools created that work within eSignal. Now, I know free software can allow you to do that. I know software like MetaTrader allows you to do that. I know software like TradingView allows you to do that. But the language that they use, the programming language, the coding language that they use, means that you're seriously limited to the scope of the tools that you can create. When you're using something as advanced as eSignal, which uses JavaScript, the scope of tools that you can create are far greater. And so that's why I would say look away from free software and look to invest. Now, members of our community get a very healthy discount when it comes to subscribing to eSignal. And one thing that I want to make very clear here, guys, is that I'm not associated to any broker, so I don't have IB agreements in place, and I'm not affiliated to eSignal. I do not profit from any outside or third-party arrangements, any affiliate schemes. These webinars that I do are for advice and for guidance, and for me to guide you as private traders onto the correct path. And during that process, I'm able to help you by getting very good discounts with relationships that we have with certain organizations. And these aren't relationships that we personally profit from. Okay, so if you want to take advantage of eSignal and the tools that you see in front of you, which I'm going to share, then please contact me at the end of the webinar. Okay, so let's get into this. As a trend trader, what I'm looking for are long-term opportunities. So what that means is that I have um, the time frames that allow me to do that. So I've got the monthly chart at the top, I've got the weekly chart in the bottom, and the daily chart in the bottom right. So monthly at the top, weekly bottom left, daily bottom right. If I'm looking to hold positions for long periods of time, I need the time frames to allow me to do that. I won't be able to do that on the lower time frame because ultimately there's more candles, stops will be tighter, there'll be a lot more noise, intraday spikes. It's just a very, very difficult way of trading. By moving your trading onto the larger time frame, you eliminate all of that random intraday noise and you can then focus on the long-term trend. So the monthly, weekly, and the daily is what I use. Monthly is where I look for my areas of support and resistance. Weekly and daily is where I look for trend, direction, and alignment. Okay, I'll explain this in more detail as we go along. On the left-hand side, I have the watch list. Now notice it's a big watch list. Don't limit your watch list from the start. This is where a lot of traders go wrong. They only focus on one instrument, like the euro dollar. And I often hear people saying that I want to get to know this instrument very well. And this instrument has a personality, and I want to know the personality. I've even seen mentors online encourage their students to, and I'm quoting, fall in love with a currency. It's a very wrong approach because remember, and you guys are probably aware of this, is that there should be no attachments in trading. It's mechanical. There shouldn't be any emotions involved. Greed, hope, fear, love, to fall in love. It's an emotional attachment to something. And in trading, that's very unhealthy. What you want is to have an attachment to whatever is paying you. First of all, you want an attachment to the process. Make sure you've got that correct. And then secondly, you want an attachment to whatever is paying you. As soon as it stops paying you, you move on. Move on to something else that is going to pay you. And the way to look for instruments that are paying you are looking for instruments that are in trend. The market ultimately does three things. It either goes up, which is a bull trend, it goes down, which is a bear trend, or it goes sideways, which is a consolidation. Bull trend, we go long. Bear trend, we go short. Consolidating market, we stand aside. Now, I know people will say here, well, I trade the swings in consolidation. No, because when one instrument is in consolidation, another one is in trend. And how have the most profitable investors and traders made money over the years? Warren Buffett, Jim Rogers, George Soros, the Turtle Traders, John W. Henry, Jesse Livermore. If you look at all of these guys, how have they generated vast sums of wealth? And that is through trading trends, not through trading consolidations. So when one instrument is in consolidation, go and find something that is in trend. So what we need to be able to identify as traders is when is something in consolidation, when is something in trend. And this is where being able to do good technical analysis comes in. And this is where being able to identify what kind of market environments you're in. So having a big watch list is essential because you can then move from one trending instrument to another. Second point to note is that currencies move in groups. People aren't aware of these simple little points that currencies move in groups. So what I mean is that let's take at the moment, let's have a look. The pound currencies are all moving. They've been moving since last year, not very neatly. They're very jerky, very erratic, but they're in trend. In the last couple of weeks or last few weeks, the Turkish lira currencies have been in trend. Everything else is predominantly in consolidation. We'll have a look at that. Okay, so how do I identify what is in trend and what is in consolidation? Well, first of all, what you'll notice, so this is a monthly chart. I have the red and the green levels. Now, the red and the green levels are major levels of support and resistance. So again, the logic behind these support and resistance levels are explained in the ebook. So if you contact me via the ebook, the logic, the algorithm behind what I determine as a major level of support or resistance is in the ebook. Crucially, what is important is that the software draws these levels for me. I don't have to spend hours a day, hours a week drawing support and resistance. I have good software tools that do it for me. So you can see here, there's a green line appearing. That's because the software has detected, according to the algorithm, that this low point is now a major support level, and it's now starting to draw the green line. For me, time is valuable. Money is important, but time is valuable. So if I have good software that can do 90%, 95% of the work for me, then I want that. The final 5% is then applying discretion on what trades that I want to take, dependent on what the software is suggesting. The software does not trade for me. This is not an EA. You guys want to get away from looking for signals, looking for EAs, looking for these get-rich-quick methods. They do not work. What you want is a combination of good software that breaks down charts for you, that says, look, here is an opportunity. This is a high probability environment. Do you want to take the trade? Your advanced knowledge that you have acquired through good trading will then look at that signal and say yes or no. If you say no, you wait for the next signal. If you say yes, then you apply a strategy. Where is your entry? Where is your stop? How are you going to exit? That is where the remaining 5% comes in. And it's actually a very simple process once you know what you're doing. Okay, so I've got major levels of support and resistance on here. The pink lines, you can see PH, PC, PL. They represent the high, the low, and the close of the previous calendar year. So as we're now in 2017, this is the highest point, this is the lowest point, and this is the closing point of 2016. This is the calendar year, guys. So January to December 2016. You can see that price is inside of these pink lines. So what I'm looking for is price to be trading outside of these pink lines. This then starts giving me a bias to price. In trading, we are trading on probabilities. We're looking for high probability environments. We want an environment where we have more chance of making money than losing money. You want what is called an edge. If I ask you as traders, if all of you guys have got live trading accounts, if you're executing trades, if I say to you, what is your edge? And you cannot explain to me your edge in a very clear and systematic way, in a very simple way, then you do not have an edge. And if you don't have an edge, you're going to get eaten by someone who does. And this is probably why people are losing money. In fact, this is exactly why people are losing money and why people are blowing accounts. You've got to have a very clear idea of what an edge is. Okay, you want to get away from those marketing techniques of, okay, I've made £10,000 into £1 million and I'm going to show you a strategy on how to do it. No, what you want to understand is how can you get consistent growth over a sustained period of time trading over an edge. This is how, going back to what I said earlier, this is exactly how the best traders and investors have done it. So the first thing that I look for, guys, is price to be trading outside of the pink lines. Now, one thing to note is that these pink lines come into effect at the end of February. So I don't look January to January, I look February to February. So what I do is I want to give price at least 1 month to react to the new pink lines. So at the moment, I'm still looking at the 2015. So if I see here, it says show only current period. If I uncheck that, you can see that price is still trading below the 2015 pink lines. Excuse me, sorry, what am I talking about? Right here, we've got the 2016 pink lines, and here we have the 2015 pink lines. We can see that price is still trading inside the 2015 levels. All of the rest of the pink line, guys, you can ignore them. Okay, they're irrelevant. I'm only looking at 2016, which is last year, and the previous years, which is 2015. Okay, so I want to see price trading outside of these pink lines. When February kicks in, 2015 will become irrelevant and 2016 comes into play. I hope that's clear. Now, beyond that, what I'm looking at are round numbers. So round numbers are psychological levels that price likes to move towards. I'm going to come back to that in a second and explain exactly what I mean. Now, the weekly, I have the 200 period moving average, and also on the daily, I have the 200 period moving average. The 200 period moving average should be one of the first indicators that you put on your chart. Why? Because the 200 moving average comes from before the internet. Old school traders used to draw charts by hand. So as they drew charts by hand, this was a very time-consuming process. So they were very selective with the information that they put on their charts. Institutions today still use the 200 moving average. Private traders should also be using the 200 moving average. Just because we have software that eliminates the process of needing to draw charts doesn't mean that we need to go down to a lower time frame to try and look for quick money. The wheel has been in motion for decades. We take the principles that are in work, that have always worked, and we learn to master them. The advantage that we have is that good software does a lot of the work for you. In fact, bad software has the 200 simple moving average as a standard anyway. Right, so what I'm looking for is price to be trading below in a bear market, giving me a bearish bias and where I look for shorting opportunities, or above the 200 moving average where price has a bullish bias and I look for long opportunities. Daily time frame, same thing. So what I'm looking for, if you think about it, the weekly and the daily, the way to look at this is the big brother, little brother scenario. If the big brother is above the 200 moving average on the weekly, I want little brother, the daily, to be doing the same. If the weekly is below the 200, then I want the daily to be below the 200. If I don't have that set up, I stand aside. In addition to that, I also have a trend filter highlighting high probability bearish environments where the trend filter is red, and green where it's bullish, black where it's a consolidating environment where you want to stand aside. So what I'm looking for is the red trend filter below the weekly on the weekly time frame, red trend filter below the daily 200 on the daily time frame. That is alignment. In a bullish market, I want to see price above the weekly and the daily 200 and the trend filter to be green. So to answer the title of the webinar, which is how was 2016 and what can we see going forward into 2017, foreign exchange returned me a profit in 2016, but it didn't return me the kind of profit that US stocks did. This here was the best performing chart of mine for 2016, and this is one thing that I really want to get private traders to understand, is that you're not going to generate wealth and growth and consistency only by trading foreign exchange. A trader is a trader. If you limit yourself to saying I'm an FX trader, you're seriously limiting yourself to opportunities to making money. If you think about it, the big dogs all trade stocks. Warren Buffett is a perfect example. Yes, he's an investor, but it's stocks. So you must expand your portfolio to include stocks. In 2016, there's a UK stock which I'm going to show you, and this UK stock, Nvidia, was the best performing stock of mine for 2016. Let's break it down according to the logic that I've just covered. Price broke through the high of 2015. So as we're in 2016, price broke through the high of 2015 here. I then didn't take any trades because we had the all-time high here acting as a level of resistance at $40. It's when price broke above $40 and confirmed the trend that I started allocating long positions. And I am still long in on this. My positions from last year, which dates back to around April, May times when I started entering long positions, I'm still long on this. I haven't exited my trade. So in April of this year, it'll be 1 year that I'll be in this trend if it's still in play. What's positive about this now is that it's above $100. When a stock breaks above $100, and if that trend holds above $100, it's likely to move to the next major level of resistance, which is $150. Below $100, every $10 is significant, and that's what I use as levels. I don't have a fixed risk to reward. I let price move towards levels. When it moves towards, so let's say I went long at 40, I would let my trends move to 50. If it clears 50, 60. If it clears 60, 70. I keep on letting price target round numbers. I then have a trailing stop loss, which is following price. If that trailing stop loss gets triggered at any point, I get stopped out. If it doesn't, I just keep on going. Remember the logic, guys. The trend is your friend until the bend at the end. Everyone understands this, but very, very few people actually know how to put this into process. Get away from being just informed and become knowledgeable. It's a very, very different philosophy to life. When I speak to people, everyone seems to be a trend trader. But when I break them down, they're trading on the 1 hour and the 15-minute time frame. It's not trend trading. Yes, there's short trends on the lower time frame, but a trend, even as we know it, fashion is long term. 3 months, that's a trend. 10 years, that's a trend. 1 hour, 2 hours, 3 hours, that's not a trend. You've got to apply real life situation to what trading is about, and then go, yes, okay, there may be small moves, but is that a trend that I'll be happy with? Answer is no. So weekly and daily, if we go to the trend filter, we can see that price is above the 200 moving average. And if you look at the trend filter, guys, on the weekly, it has remained green from around $30. So all of that random all of the random pullbacks in the trend, totally eliminated from the trend filter remaining green. And if we go to the daily time frame, again, you can see how it's predominantly green. Now remember, on the daily time frame, there will be more candles, there'll be more pullbacks, and so the trend filter will on occasions change color. But this isn't enough to tell me to exit the trade, because the bigger brother is green. So going back to what I was saying, as long as big brother is dictating that the long-term trend is intact, then the daily time frame, I'll simply hold my positions and trail with my trailing stop loss. So this is now above $100. And what do we have? Well, a potential double bottom formation. I say potential because it needs to be confirmed. And how it will be confirmed is with a break and a close of this pivot and further strength. At the moment, this is simply in a mini area of consolidation. My stop loss is underneath $100. If this weakens further, I'll exit for my trades. But at the moment, I'm still very much live in this, and I'm looking for a continuation to the upside. Okay, another stock that performed very well for me in 2015 is the stock of Boohoo. So I don't know if you guys are aware, but Boohoo is an online clothing company. I think they specialize in women's clothing, but have recently started doing a men's range. I could be totally wrong. I don't shop at Boohoo. I don't do online shopping. It doesn't interest me, but the stock does. So you can see here, very, very nice looking stock. Look at the weekly, same logic. It's quite a new stock, so there's no weekly 200 moving average, but trending nicely to the upside. And if you look at the daily chart, above the daily 200, nice moving trend. And I got stopped out around this spike level here. So if we go back, nice looking trend to the upside, and I eventually got stopped out around here. I'm now actually back in this. When price broke above this consolidation, I'm now back in this, and I have a long position running. So once price clears 150, I'll start allocating more compounds and start adding further positions. Remember, Warren Buffett, he says that only amateurs massively diversify their portfolio. You could open up my broker account and I could have 20 trades running. If you look at those 20 trades, there'd only be 4 stocks, for example, but each stock has 5 positions running. I won't have 20 different stocks. That's how you guys want to start thinking. Look for the best trending stocks and repeatedly compound. Look for the best trending currencies and repeatedly compound. Don't try and be, okay, I'm going to trade the dollar yen today, take a few trades, tomorrow the euro dollar, take a few trades, back to the dollar yen, tomorrow the Aussie CAD. That's not how you want to do it. Get in on a good trend, understand high probability environments, hold and compound. It's simple, it's powerful, it's easy to adapt around your lifestyle, and it's empowering. Once you understand how this works, and once you have an account where money seamlessly flows into your account, you can walk away from the system, have control of your time and your money. This is the advantage to trend trading. With day trading and scalping, you're sacrificing time for money. You're sat in front of your screen all day, every day, trying to make money. For me, I have better things to do. I've got family and friends I want to spend time with. I've got things that I enjoy doing. I want to be able to do all of that without sacrifice of profit. And that's why trend trading is so powerful. Okay, so looking at currencies, guys. Some of the currencies that I traded last year, of course, pound. The pound currencies were all very much very much in the news for whatever reason, Brexit, etc., etc. I tend to ignore all of that. when it came to Brexit, I simply closed my positions a couple of days before, purely because it's a real gamble as to what direction it would have gone in. As a trader, my focus is always on capital protection. Guys, when I started trading in 2007, I only had one account. Now I have multiple trading accounts, which I have grown over multiple years of trading. I have accounts for stocks. I have accounts for commodities. I have accounts for Forex. I have accounts for different strategies. I don't just trade off one account. Of course, this has taken me time to get to this stage, but it's a business. You have to think about this in a strategic way. So let's say you're trading foreign exchange, fine. When you get to a certain amount where you've grown your account, you split that and you're then able to trade stocks. When you then get to large amounts of money in stocks, you split that further and you say, right, this account is for breakouts, this account is for pullbacks. Okay, it's a process. Now, if we look at the pound dollar, if we take it from this point here, 1.7 going back to 2014, that's when it started weakening. Now, if we actually look at the natural movement to the trend, price found resistance at 1.7, which was a zonal resistance going back to 2009. So the fact that price failed at this point is highly unsurprising. It then trended towards 1.5, round number, major level, which is the floor of this consolidation approximately. Then had a bounce towards 1.6, round number. Then had a continuation in the direction of the major trend, broke through 1.5, came to 1.4. Bounced to the upside, came towards 1.5, resistance now, next leg down. Look at 1.3, a little bit of indecision. Came towards 1.2, major support at the moment, struggling. My point is, round numbers are psychological levels that price likes to move towards. Look across the board, doesn't matter whether it's a currency, a commodity, or a stock. Price naturally moves towards the levels. If you understand this, you can remove having fixed targets. Don't think in terms of 1 to 1, 1 to 2, 1 to 3. That won't grow an account unless your account is large enough. What you want to think about is 1 to infinity. Because as long as that trend is in play, I keep on wanting milking the profit. I keep on wanting compounding. And this isn't greed, guys. This is me just having a strategy and taking advantage of the market. I'm risking 2%. I'm not risking 10%, 20% to make money quickly. I'm risking 2%. But because I'm holding it for weeks and months, my 2% is growing, and as I'm compounding, it's growing to vast sums of money. Nvidia has returned me huge sums of money. In terms of percentages, it's massive. And that's the power of compound growth. For me to explain to you the power of compound growth, guys, think of it this way. Warren Buffett, he's worth $80 billion. Yes, I understand it's a large sum of money, but he started with modest sums of money. He's just a very smart individual who understood very quickly how to make money and how to leverage it through good mentoring. He puts his success down to a mentor. He's not self-taught like a lot of people claim to be. He had a mentor, which shows the power of mentoring. Now, if we look at Warren Buffett, he's now worth $80 billion. Before he turned 50, he was worth $300 million. Now, of course, again, that's a staggering amount of money, but what I'm talking about is the growth from $300 million at 50 to $80 billion at 80 in a 30-year period. That cannot be achieved from being in and out of investments. That is achieved by holding and compounding. And that is the view that you guys must adopt if you want to get away from being glued in front of your screen and growing an account at the same time. Okay, so if we look at the weekly chart, it's been below the weekly 200 moving average, but look at the trend. If you compare this to Nvidia, which I talked about, this has been very jerky. And this has been the state of foreign exchange for quite a long time. The last time foreign exchange gave out really, really good trends was the euro dollar. So if we go back to 2014, 2015, the euro dollar weakened significantly. This was the last real trend that that foreign exchange handed out. Since then, you can see, of course, euro dollar has been in consolidation. You shouldn't want to be trading the euro dollar. It's very messy. So going back to the pound dollar. Yes.
All right. Sorry, can I interrupt? We've got a couple of questions coming in,
Sure.
but before we get into this new one, just working back for a few minutes in reverse, Marcello says the PC, the PL, and the PH.
Yes.
Could you just reiterate the meanings of these abbreviations, the pink?
Yeah, sure. So if I just go into the back end of my software, what you can see is the previous high, previous low, previous close of the previous calendar year. So this is the highest point, the lowest point, and the closing price of 2016, the calendar year. So the way my software works is that it stacks them. Here's the high, here's the low, here's the close of 2016. Here's the high, here's the low, here's the close of 2015. Here's the high, here's the low, here's the close of 2014. So my software will automatically plot these levels. And the reason why I need them is because I want to see price trading outside of these levels. I don't want to see price trading inside of these levels.
Big picture stuff then.
Correct.
Ray says, what time frame do you take your entries from?
Yeah, good question, Ray. My entry is either done on the weekly or the daily. My stop loss management, which is the most important part, is either the weekly or the daily. Now, I can sometimes go down to a lower time frame, which I do for an entry point. So sometimes I'll go down to a 4-hour time frame or a 1-hour time frame. I don't generally go down lower than the 4-hour, but occasionally I may go down to the 2-hour or the 1-hour for an entry point. But my stop loss management is always done on the daily or the weekly time frame. So the logic is enter like a day trader, manage like a trend trader. So look beyond the entry and really focus more on how am I going to exit to be able to stay longer in the trend.
Fantastic. Where is now we're going back actually 15 minutes.
Sure,
Looking
no
at so
problem.
it's a different chart, but George was asking where the 50 simple moving average was that you were using previous to that. He wondered if it was a new strategy, so or maybe a little bit off topic there. I think you still
No,
use the simple,
yeah,
no?
yeah. Yeah, 50 simple moving average is still on there. I actually have a subchart indicator which I haven't brought up. I was just trying to keep my charts clean. Who was that? Who asked the question?
This was George.
Ah, George, yeah, George, good question. So yeah, I still use the 50 simple moving average. I just don't have it on the charts. I have a subchart. So if the subchart indicator is red, that means price is trading below the 50 simple moving average. If it's green, price is trading above it. I want to try and keep my charts as clean and as simple as possible. And so the 50 simple moving average is still very much significant when it comes to my analysis.
Okay. More of a generic question from James. He asked, how do you define your edge? He says, your edge might be a setup, but another's edge might be the ability to analyze news. How do you get to know your edge, do you think?
Yeah. Good question. Good question. As as a private trader, I ignore the news, and the reason for that is simply because I am outside of the institutions. Institutions pay a lot of money to get news early. So by the time we as private traders hear news, it's actually old. And so trying to then copy the institutions and trying to build an edge on old information is a false economy. The price will reflect the fundamentals for us as private traders. So I allow the fundamentals to be absorbed. I understand how institutions trade. I wait for them to move the market, and I then find an entry point and then apply a strategy.
Fantastic. Great. That's a good answer. I like that. Thanks, Zaheer.
No problem.
Now I'm going to struggle with the name Tango Value, Surendran. Would you not lose more if you just waited until Big Brother turned? This was when we were talking about the big trend on the chart 5, 10 minutes ago. So would you not lose more
I'm
if you
not.
just
I
waited?
don't quite understand. I don't quite understand the question, to be honest with
Mm.
you. Would you lose more? You mean when the trend comes to an end?
I think that's what he's suggesting is you're talking about the trend is your friend until the bend. I think you said.
Okay.
Um, is
So I think what the gentleman's asking is at the end when the trend reverses,
mhm.
do I give profit back? And the answer is yes, because as a trader, I think in terms of risk to reward. For me to see the trend continue, I have to have risk on the table. If I have too tight a stop loss, I'm not going to be able to give price the space to move. Now, I know what people are thinking. Now, I think it was Nvidia, which is probably what the gentleman's asking about. And if we go to the daily time frame, so at the moment, my stop loss is below 100, and if I get stopped out, I've given back all of this profit to the market. So at this point here, let's say if I exit at this point here, I may exit with 30% growth. Whereas if I had a tighter stop loss, I may exit with 25% growth. But for me, I would rather give back more profit with the potential of further growth to the upside. I think in terms of risk to reward, and this is a skill of a trader. I'm not focused on the money that I've locked in. I'm focused on following the process and seeing how far this trend can develop and being able to stay in a trend for as long as possible. And let's think about it, guys. Let's be realistic. I could exit at this point with either 30% or I could, 25%, or I could exit at this point with 30%. However, compare it to a bank where you get 1% or 2%. What difference does it make if you exit with 25% or 30%? It's the process that I'm focused on and not the money. And that's where people go wrong.
Got you. Good answer. One final question for the moment. Paul asks, are you trading yearly breakout?
Yearly breakout. Good question. You've caught me on that one. What do you mean by yearly breakout? I mean, for me, the pink lines represent the levels of last year. So if price is trading above or below, then that for me is a breakout of those levels.
Mm-hmm. Yeah, that would be my interpretation as well. Okay, well, we'll let you carry on, Zaheer. If any more questions or any advance on these. Oh, sorry, one final one from Richard. He says, how does the trail stop on Nvidia? How trail stop?
I think the question probably is how do you calculate your trading stop losses, which is probably the question. So it is a good question. The trailing stop losses are unique to the personality of whatever instrument that I'm looking at. So if you look here at the bottom, I have a tool which tells me the ATR of the currency. This isn't the currency of the stock that I'm looking at. This isn't actually set correctly. This should say 2 decimal places. Okay, so this gives me the average true range. So how many pips or how many points a currency or a stock is moving over a number of days. I then use that as a way to guide me on how to place my stop losses. So if you think about it, let's say for example the euro dollar has an average true range of maybe 90 pips a day. The pound Japanese yen has an average true range of 200 pips a day. That will then help me determine how I calculate my stop losses.
Got it. Fantastic. Okay, Zaheer, we've got about another 10 or 11 minutes to go, so I'll let you carry on. Sorry to interrupt. Thanks.
Yeah, no problem. Okay, so let's have a look at the currencies that I'm currently in and potentially moving forward what we could see. So I am short on the pound currencies. I know there was a bounce to the upside based on the speech from Theresa May. Again, I didn't watch it. I was out. I have positions running. From a technical point of view, price simply bounced at 1.2. Now, I know on that day, price moved 400 pips. But if you look at the long-term picture, it's fallen 5,000 pips. So how is a 400 pip move to the upside of any significance when the trend has been in play for 5,000 pips to the downside? Weekly, below the weekly 200, price is in this area of consolidation. Daily, below the daily 200, prices in this area of consolidation. Now, I went in short around this point here, and you can see that I'm in profit. Yes, there's a correction, but from a technical perspective, it's simply a bounce of 1.2. This is not a reason for me to panic. This is where I hold my positions. If it continues to go against me, I don't have any more risk on this table. I'm going to get stopped out for no loss. Yeah, okay, I'll get stopped out for minimal profit, but I'm not going to get stopped out for a loss. And for me, protecting my downside is crucial, and I then allow my positions to run for as long as the trend is in play. What I'm now looking for is a correction to the downside and a break and a close below this level for a continuation. I'm also short on the pound Aussie dollar. Same thing, trend is very much bearish. Round number 1.6 acting as a level of a support. Below the weekly 200, trend filter is now red. Below the daily 200, trend filter is now also red. Looking for price to break and close below this pivot support. At the moment, you can see it's just a bounce off 1.6. No surprise, round number. I've been short from around this point here, so my position's in good profit. Small bounce to the upside, waiting for 1.6 to clear, waiting for this whole support level to clear, and then a further continuation towards 1.5, 1.4, 1.3, and I'm going to then compound again. And that's what I would like to see, by the way, guys, moving forward through 2017. Doesn't mean that it's guaranteed to happen, but based on what price is currently doing, this is what this is what I envisage potentially going forward. Okay, pound New Zealand dollar also in a bear trend, all-time lows at this point here taken out, retest, weakness, now looking for this pivot low and then a continuation. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. Again, I've been short from actually this point here. I had to hold through this consolidation. Stop loss was above 1.8. Further weakness now. You can see a bounce at 1.7. No surprise, round number. Looking for weakness to the downside. A break and a close below this pivot support will suggest a continuation, and that's when I'll compound. Now, a currency that I am long on, and that has handed out good profit, is the US dollar Turkish lira. Big consolidation, breakout in 2013. We can see now that it's finding resistance at 4. Again, look at these periods. Consolidation period, break, retest, round number 2. Trend, consolidation, round number 3. Trend, resistance, round number 4. What I'm now looking for is price to clear this level and move towards 5. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. Now, where people struggle is dealing with these pullbacks. This pullback is not something that I need to be worried about because it's happened here before. And if you look at where it pulled back to a previous support zone, bounced to the upside. Same thing here, it's pulled back to a pivot support based on a previous candle, finding some kind of support, and I'm now looking for a bounce to the upside. A break and close above this level and the round number 4, and I'm going to start compounding. This is where you have to hold. This is not where you go short, which is what a lot of traders do, because you're simply trading on one factor when the overall bias is bullish. And this is not an environment for me to panic because my trend filter is still green. When price breaks above 4, I'm going to continue to the upside. Also on my watch list is the Turkish lira, Japanese yen. So going back to what I said at the beginning, currencies move in groups. Trend to the downside. Below the weekly 200, trend filter is red. Below the daily 200, trend filter is red. Price is now around the 30 mark. Trend, pull back to this whole resistance zone. Move to the downside, a break and a close below this level, and I'll start entering short positions. And the euro Turkish lira, also very much on the watch list, move to the upside, is trading above round number 4. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. I'm not long in this yet. A break and a close above here, and I will consider opening long positions. And so that is what I envisage going forward for 2017, is focus on the pound currencies. We are likely to see further weakness based on what price is currently suggesting. I can't guarantee it, but we are likely to see further weakness, and we're likely to see further strength on the Turkish currencies based on what price is currently doing. If this does not materialize, it does not materialize. So where have the trends moved to? Keep an eye out on stocks. So if we go to stocks, if you look at the Dow, we're looking for Dow to clear 20,000. If the Dow clears 20,000, very likely enter another bull run. And look at the bull run in stocks, 2009 to 2015. That's a 6-year bull run. This is why stocks are fundamental to your trading portfolio. The Nasdaq 100 also now trading above 5,000, above the all-time high. If you listen to the news, you'll be waiting for reversals, and reversal may never come, guys. So you can either listen to the news and wait for the reversal, or you can focus on price and go in the direction of the trend. So to summarize and to bring this to an end, focus on the pound currencies. Well, first of all, take a step back, focus on the process. Make sure you're doing the right things. Make sure you're understanding long-term trends, high probability environments, market environments, have the strategies, risk management, exit management, stop loss placement. Make sure you have all of that understood and pre-thought out. Secondly, move to where the money is. Expand your portfolio. Forget focusing on just the euro dollar. Expand your portfolio. Go to where the money is. Currently, looking at foreign exchange, it's the pound currency is going short, the Turkish lira currency is going long. If that doesn't materialize, go back to your watch list and look out for what is in trend. If foreign exchange doesn't materialize, keep an eye out on stocks. Maybe both foreign exchange and stocks materialize, in which case you can take advantage of both of them. Do the right things, guys. Think like a trader. Develop the skills and the mindset of a trader. Don't get caught up in the hype and the marketing. This is a business that will reward you very well if you do the right things. Okay, now to finish it all, guys, I'm going to end up with a few links to my social media. If you want training, I run a community, £99 for a whole month of training. It's an entry-level course, which then leads on to further one-to-one training. With this, you get this strategy page. So I will be giving you guys this strategy page as part of the training. So you get access to the trend filter, the red and the green lines that are the major pivots, the pink tools, the subchart indicators, everything that you see on here, I will be giving it to you as part of the training. This will mean subscribing to eSignal, but subscribing to eSignal at a discount of $30 for the month. So it's £99 plus VAT if you're in the EU for the month of training. You get community support, 2 strategies, weekly webinars, training in foreign exchange and stocks, watch lists in foreign exchange and stocks. You get community support for a whole month, and you get discount on eSignal, which is about $30 approximately, I think, for the month. Normal price, guys, is $150. You're getting it for $30. It's a massive discount for very, very good software, and something that I do encourage you guys to take advantage of. So please get in touch with me, Zaheer at zaheeranwari.com. I'll send that information along with the ebook that I will be emailing to you guys. So please email me, Zaheer at zaheeranwari.com. Next thing, please, guys, follow me on Medium. If you don't know what Medium is, it's a blog site owned by Twitter. Very, very good blog site. I've only been on it for about a month, and I've already picked up 827 followers. A lot of good information on here. I update it pretty much every single day. If you scroll down, there is an article here, which, there we go, a fresh start to trading in 2017. Please have a read of that. Also have a read of this, manage a watch list like a hawk. I explain how good watch list management is done. I talk about my stock on Nvidia. I talk about why gold is not worth trading at the moment. Lots of good blogs up here, guys. Please follow me. Again, it's all free, the website, Medium, so please get on there. Connect with me on LinkedIn. Excuse me. Connect with me on LinkedIn. Facebook. If you feel to contact me on Facebook or connect with me on Facebook, please do that. Search for me. And also, I have a Facebook page as well, guys, which is City Trader Lifestyle. So facebook.com, City Trader Lifestyle. A lot of information, tweets, videos, blogs, stuff that I get up to day, all on this page as well. So if you are on Facebook, please search for me. Okay. Simon?
Okay, fantastic. The blog name is medium.com/@Zaheer Anwari. I'll put it in the chat box there.
Yes.
Lots of questions. We don't have time for all these questions, I'm afraid. Thanks. Great engagement, but perhaps just one final question, I think, from Peter, which is a good one. Is this geared around long-term strategies? How and when do you decide to take profits, or do you just wait until you're stopped out? I think that is something a lot of people might be wanting to reaffirm. In your strategy, can you just explain what the signal is for you taking the profits, or is it just waiting for the stop?
Yeah, it's a good question. I don't take profits until the trend comes to an end. I don't scale out, I only scale in. I don't want to limit my growth. Now, I understand the logic behind the question, and I may be wrong on this, but it's a question that I get asked a lot of times. And the logic behind it is people want to be able to take out money from their trading account so that eventually they're able to replace their job. That is something that you will achieve. But if you've got a £10,000 starting amount, and let's say you return £2,000, so you've now got £12,000 in your trading account. Yeah, you can take out the £2,000, or you can leave the £2,000 and have £12,000 and grow that further. The growth on £2,000 on £10,000 is not going to be as big as the growth on £12,000. So every time you make profit, you want to keep it in your account. You want to give yourself time to grow an account. And so the way you grow an account is by allowing winning positions to run and repeatedly compounding into them. When you're at an account size that can then fund a lifestyle by taking out money and then being able to continue with the compound growth process without affecting money coming in, that's when you can then start looking to withdraw money. So don't limit your profits, don't scale out, only scale in, and only exit when the trend dictates an end.
Fantastic. So here, thank you very much indeed. We put the link in for people to apply for the ebook through your email. We'll also follow that up as we normally do afterwards. But thank you for getting us started. First session of Round the Clock and first Round the Clock of the new year. So thank you very much. Great. It's been great to have you on board again.
Well, thank you, Simon, as always, and good luck with the rest of the webinar. I hope you don't have any tech issues.
Thank you very much again. Yeah, my fingers are crossed. Everything's crossed. Thanks
Take
very
care.
much.
Thanks, Simon. See you later. Cheers, guys.
Bye-bye.
See you later, everyone. Bye.